Welcome back to the channel, everyone. Today I want to talk about two strangely bullish articles from CNBC. The first article we have here is the Interactive Brokers founder saying to not short AMC because meme stocks can soar to unimaginable new highs. The second article we have is that AMC's aggressive post-pandemic strategy could pay off, basically examining more of the long-term AMC bull thesis. If you guys are new to the channel, or maybe you've seen some of my other videos, but you haven't yet subscribed, then be sure to subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. But for now, stay tuned and let's make some money. Obviously, the first article we've got is the Interactive Brokers founder, and he's saying to resist the temptation to bet against the meme stocks like AMC Entertainment, because these prices can go to unimaginable new highs before they settle down to a reasonable valuation. Basically just explaining a short squeeze. He says in the article, if you're willing to sit there and hold a stock at $200, $300, $400 a share that keeps making no money, it's impossible that these prices can hold up at this level because more and more people will short it. Eventually these stocks will go back to their valuation, which is roughly single-digit dollars, even if that, he said. On the long run, these longs will lose their money, so while you may try and catch a sudden drift upwards as a trader, I would recommend betting against long on these stocks. So he kind of contradicts his words there a little bit because he says don't short the stock, but also don't long the stock. So he's basically saying don't trade the stock whatsoever. He also thinks that it's not possible to long the stock up until the short squeeze is finished at say $400 a share, maybe even higher, and then sell the stock. He says, you've got to hold on to your stock if you are long and watch it go back down to single-digit dollars, which obviously isn't really the case. However, there's a few interesting things that I took away from this article. Firstly, even the big names like the founder and the chairman of Interactive Brokers is saying that the AMC short squeeze is not over and that the AMC stock could potentially hit $200, $300, $400 a share, if not maybe even more. I think a really interesting possibility is that maybe he's got some additional access to the in-depth data. And I don't want to necessarily say that it's a shoo-in, but maybe he's fairly confident that the AMC stock is actually going as high as $400 a share, if not higher. And therefore he's just trying to warn people, maybe it's hedge funds, maybe it's anyone out there, away from shorting the stock. Obviously, he must be fairly confident to issue that warning. This article and this announcement comes after a few other brokers like TD Ameritrade and even market makers like Jefferies have actually restricted some of the trading and restricted the short selling on the AMC stock. Obviously, all of these stockbrokers and these broker platforms are just trying to limit their risk exposure. Obviously, when somebody goes short or goes long on a stock, especially using leverage, they could get liquidated and forced to cover their position. And obviously, depending on how quick a stock is moving, when the platform actually covers that position or liquidates the customer, they might do it a little bit too late or a little bit too early, causing their own platform and themselves large losses, especially if a stock is moving and is very, very volatile. I do think it's fairly important to remember that a short squeeze is a fairly short-term thing. Obviously, the stock squeezes initially, the shorts cover, and then eventually after time, the price becomes less volatile and settles to a more reasonable level. I do think that AMC definitely has a share price much higher than single-digit dollars based on their future fundamentals, which we'll be examining a little bit later in the next article, but potentially not as high as $1,000 a share forever. That would just be a stock increasing in value and not necessarily short squeezing for a shorter period of time. Also guys, if you haven't already joined the Ape Nation, but you want to own some AMC, then be sure to check out the links down in the description to Webull and Free Trade, where you can currently get some free shares. You can currently get 2 free shares worth up to $1,850 with Webull at the moment, and a free share on Free Trade worth up to £200. Now let's check out the next article, which basically goes over AMC's bull thesis. The article basically says that if movie-going traffic returns and the box office ramps back up to $11 billion a year, which was generated in North America prior to the pandemic, AMC could theoretically make more money because its market share is bigger. So let's break down what that really means. We know that over the last few months, AMC has raised quite a bit of cash. The article says that it's raised approximately $2 billion in cash over the last 6 months, predominantly from stock sales. With fresh funds, the CEO says that the company plans to look at several acquisitions, such as ArcLight and Pacific Theatres. So that means they're going to take quite an acquisitive aggressive strategy and acquire some new businesses, maybe some theatres that aren't going to open up in the future, and maybe just some competitors, meaning they're going to own a larger portion of the market and be able to receive more customers in the future. Down at the bottom it says that AMC is making the bet that they're going to be the primary theatre owner, effectively having a monopoly over the theatre industry. And he says that you're going to have to work through us if you want to get your hands on quality theatres. Effectively what this is saying is that AMC is going to have to work hard if they want to be the best. But so far I think that AMC have been working very hard. They've managed to control their costs, improve revenue wherever possible, and they've managed to raise substantial cash over the last few months, taking advantage of the stock being at a higher price than it was at the back end of 2020. I think that the hedgies have got AMC really wrong. I think that the hedgies are comparing AMC to Netflix and saying that people don't really want to go out to the cinema anymore, they'd rather watch Netflix at home, trying to compare AMC and Netflix to Blockbuster and Netflix. But I think they're missing a fundamental difference. With Blockbuster and Netflix, you're both watching a movie in the comfort of your own home. Obviously it's easy to do with Netflix because you can just download the movie instead of having to go out to the shops. But when comparing AMC to Netflix, it's a completely different ballgame because it's a completely different experience. You go out to the cinema to have that cinema experience. The big screen, the popcorn, the proper surround sound, the good viewing experience, like good quality screens, and you can't get that at home watching TV on a 13-inch MacBook, for example. It's completely different. I think it's really interesting that CNBC is starting to post some more bullish articles, having been so bearish in the past, and almost attacking other influencers like Matt Kors and Trade Trades. Maybe they're realising that they're being so one-sided towards the hedgies and they're trying to be more unbiased. Either way, it's good in a way they're posting more bullish articles. Effectively, they just need to stay unbiased and not post hit pieces. We also saw some fairly interesting tweets today saying that the SEC is monitoring ongoing volatility in certain stocks and that they're on the lookout for manipulation and other forms of misconduct. Obviously, that's good that they're on the lookout for it, but it sounds like they're saying that they're just starting to do their job. So they probably should have already been on the lookout for manipulation already, but maybe they've increased the security or, doubled their efforts, basically. But we also saw that the SEC recently charged a firm with naked short selling. So it's good that these practices, these illegal practices, are now starting to come to light and people are actually facing fines for it. Still not quite jail time or anything like that, but better than nothing, I guess. Later, I'm going to be doing a bit of a recap on the AMC stock for today, which is Monday, talking about the volume, talking about the short interest data, the margin debt, and a lot of other different key points. But guys, if you want to hear about news like this before I make a video, and you want to become part of my team where we talk about stocks before they blow up, then be sure to check out the link down in the description below to the Patreon and the private Discord. And as always guys, if you enjoyed this video, then be sure to check out some of my others. Alternatively, subscribe to the channel and ding the notification bell because that way you'll be alerted when I upload a new video. Cheers.